very, very, very basic depreciation video is coming up now. First of all, true or false, depreciation is a cash expense. You should know by now that depreciation is not cash. There's no physical cash moving around at all. It is a non-cash expense. It's just you saying that I know that my vehicle, for instance, the price that I'm going to pay for it today, the cost price, that is not going to be the value of my vehicle within the next 5 years because I'm going to be using it. So it's going to get added kilometers on. I might damage my vehicle if I don't take care of it. New vehicles are going to be manufactured that are better than my vehicles. So the value cannot remain the same. And that's why we account for depreciation, because we need to show the true value, the accurate value of our assets within our financial statements, because we may not overstate or understate any of the figures within our financial statements. And you now recording your depreciation on an annual basis at year end, or once you get to grade 11 and 12 on the date of disposal, you are ensuring that you are matching that expense to the year in which the transaction occurred. Okay, so depreciation, definitely a non-cash expense. And you should have seen that when you did cash budgets as well, where we discussed the receipts and payments versus income and expenses. Okay, right, so number 2 says calculate the annual depreciation expense. And like I said, this is now basic. So depreciation is calculated using the cost method. And then they gave us the cost there, they gave us the rate of depreciation, and then they now want us to calculate the amount. So we are going to go the amount for depreciation. We are going to do art. Art wants to know, what is the amount that I'm working with? Am I working with the cost or the carrying value? They said that we are using the cost method, in other words, the straight line method. Therefore, the amount in this case is the cost, right? Times by the rate. What is the percentage of depreciation that we are accounting for? And time, how many months did we own this vehicle out of the 12 months in the financial year? So in this case, my equipment had a cost of 40,000 Rand. Okay. Depreciation is calculated at 10% per annum. And it didn't say that I only owned this asset for 1 or 2 months. Therefore, I owned it for the full financial year. So we will tell you if it's only partial and not the full year. So 40,000 is my cost times 10% per annum for 12 out of the 12 months. So 4,000 Rand. Right. What am I going to do with this 4,000 Rand? I'm going to debit my depreciation expense. In other words, in the SOCI, I'm going to add on to the depreciation expense 4,000 Rand. And then I'm going to credit the accumulated depreciation on equipment account. Once again, you are not abbreviating accumulated depreciation on equipment account in the SFP. And by crediting the accumulated depreciation on equipment account, you are saying that the value of your fixed assets are now decreasing within your SFP. Okay, so even though you are adding onto the account, you are decreasing the value of your asset. So now your equipment's carrying value is 40,000 minus 4,000. So in your SFP under your fixed assets, you will now no longer have 40,000, you will have 36,000 for your equipment. Okay, so that's equipment. Then you also had a vehicle. And once again, it's the cost. So amount is cost because it's straight line method times R for rate, and that's 15%. And then time, and we had it for the full financial year. So that amount then is 120,000 times 15% for the full financial year, 18,000 Rand. And yes, 12 over 12 is the same as not saying anything there, but it's just to remind you that it's not always 12 months. So just get into the habit of saying times 12 over 12 so that you're always on the lookout for how many months. Once again, here you are going to debit your depreciation expense account in the SOCI, so you're going to add on. So you will not only have 4,000 Rand depreciation in your SOCI, you will have 22,000 because you need to add these two. And now you are going to credit your accumulated depreciation on vehicles account. Okay, so the accumulated amounts go to this separate accounts. You will not add those. It's only the expense that is added. Righto. Next up, equipment cost 50,000 Rand. The accumulated depreciation currently in your pre-adjustment trial balance is 10,000 Rand. Your rate is 10% using the straight line method, so 10% on cost. So nice and easy. Yes, I've given you the accumulated depreciation for now, like on the first day, but you must still calculate the current year's depreciation using the cost, because it's straight line method on cost, times 10% for the full financial year, because they didn't tell us otherwise. So in other words, 5,000 Rand. So you must now in the SOCI go and add to the depreciation expense 5,000 Rand. Then in the SFP, you are going to go to your fixed assets. And I love doing this. Giving you the SFP and then asking you under non-current assets, please show me the fixed assets value. And then you must remember that your fixed assets now consists of the cost of that asset at the beginning of the year, minus the accumulated depreciation that you had already written off in the prior financial year. So this is just your opening balances. And now in the current financial year, you have now debited your depreciation expense and credited your accumulated depreciation expense. In other words, saying that my assets value has now decreased even further. Therefore, your new fixed assets carrying value to be shown in your SFP is 35,000 Rand. So it's your 50,000 cost minus accumulated depreciation on day one to get to your 40,000. But you've also used that equipment during the current financial year, so minus another 5,000 over there. Okay. Then a vehicle with a cost of 150,000 Rand was purchased on the 1st of June 2024. Your financial year end was 28 Feb 2025. You depreciate your vehicles using the straight line method, so on cost, at 20% per annum. So the amount is the cost, 150,000, times by the rate, and that is 20%, times by June, July, August, September, October, November, December, Jan, Feb. So times 9 out of the 12 months. So now we only had it for part of the financial year. So 150,000 times 20% times 9 divided by 12, 22,500. Okay. So in other words, in your SOCI, you are going to add on because you are debiting your expense account with 22,500, and you are then going to credit your accumulated depreciation account with 2,500, which means that in the SFP, your vehicle's carrying value is now 22,500 Rand less than what it was at the beginning of your financial year. So that's just basic depreciation calculations and recording.